Welcome to Tradespoon. My name is Mark Carpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live strategy roundtable discussion where we talk about current market conditions, any questions you might have about Tradespoon or Yellow Tunnel subscriptions, and how to trade and take advantage of current market volatility using Tradespoon technology. For those of you who are new, welcome. This is my brief bio. Do me a favor, just type in first. If this is your first live event, type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm very proud of that experience. I'm very thankful. And started Tradespoon in 2012, started Yellow Tunnel a year ago. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 20 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Disclosures: trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be positive or will equal past performance. All right, so usually I talk about Tradespoon system. Before I get into that, let's, on everybody's mind, I think is more of where the market is heading. So let's look at the spiders again. There's again one of the news that very hard to anticipate, but diagnosis of President of the United States and the First Lady of having the COVID-19 virus, and you know, my thoughts are and prayers going out to their family, and I wish them quick recovery. That is an unfortunate event, hard to predict. Markets sold off. I would look at the actually futures data, because I was actually playing poker, and it happened around, I think, midnight Chicago time. So if you look at the futures data, so it said that 33, well, using the futures, 3,300 is basically a support level. We retested it on September 30th. Let's go out probably more, 1 month. 1 month, right? So this has been a support. We broke through this September 20th. The low was 3,200. And then market recovered about 50% retracement. We said 3,400 is kind of 50% retracement between 3,200 and all-time high 3,600. So the market has been trading in the range between 3,400 and short-term 3,300. And overnight we've retested it during the announcement. As soon as the announcement came, we retested the support, bounced back. Sorry, it's here midnight. Sorry, we've retested it on September 30th. The bulls were able to hold on to support, and then when the COVID-19 announcement came in at 12 o'clock, we retested it again. We've retested it again during European session and also during the unemployment numbers. So we had multiple retests of this number. I think from my perspective, it's an unfortunate situation. Again, adds to uncertainty in the market. All we can do is pray for the health of the president and wait and see what will happen. I think the market will be driven by the headline news. If the symptoms are mild, we will retest 3,400, and if situation worsens next week, then potentially we will break out of this range. Until we break out of this range, I'm going to assume that we will retest 3,400, 3433 several times, and the same thing goes through the 3300. So if you're aggressive day trader, buying at 3300, I think it makes complete sense with a clearly defined 1% stop loss, because if the 3300 doesn't hold, then we will quickly retest 3200, and vice versa on the upside for aggressive trader. For longer term trader, I don't think anything has changed. I think the bull market is intact. I would continue to look at the currency market. That's the main driver. Currency market hasn't moved. Potentially, obviously dollar is oversold, potentially rebounding back, but the pattern of lower lows in the past few days, I think, is positive formation. Hasn't rallied today on the news. Treasury market hasn't changed, right? No evidence of people moving into a treasury, and gold is slightly positive, flat, facing this overhead resistance. So I don't think, at least as of this moment, this is just technical trading, and the market is trading in well-defined range. Let's look at the other indicators. Materials turning positive, right? In the downward market, that's a win for the bulls. Home builders down 0.5%, so you see value stocks are actually outperforming. Industrials almost flat. So today is the value day. Gold's dollar flat, gold flat. Defense sectors flat. Consumer staples down 1%, and we have stocks that rallied the most in the past few days. Growth stocks, retail rallied the most, sold off today the most. Biotech rallied the most, sold off. Semiconductors had a strong move to the upside, almost retested 52-week high. Pullback to this neckline. Kind of a head and shoulders classic pullback. So all indexes, all the sectors are sitting at the key support level, whether it's semiconductors or biotech, and I think we will see what happens next week. Unemployment numbers were better. The unemployment rate was better than expected. The number of job created in September was worse than expected. So kind of a mixed report. Doesn't look like has any impact on the market as of right now. And all right, so that's my view on the market. I think driven by the headline news, assuming that the symptoms are mild and the president will recover in the next 2 weeks, I think that's when the market is probably going to break to the upside, right? So I think the market still has a good probability. I'm still bullish on the market, but again, I would pay attention to the headline news and see if the market trades outside of this range, 330 and 342. So that's my view on the market. Again, there's a lot of uncertainty in the market. Trading psychology is very important. That's why we have a Yellow Tunnel website. I encourage you to review it. When uncertainty arises, the only thing you can concentrate, the most effective way to deal with uncertainty, from my perspective, is to mentally concentrate on things that you can't control. What can we control? We can control 4 different things, which is a part of the trading plan, and which is something I cover every single day pre-market routine in a live trading room. So we have a live trading room every morning and the closing bell, and before market opens, the pre-market routine, I always go over the trading plan, trading journal, and future rehearsal exercises to see at which key points to rebalance your portfolio. So in terms of trading plan, the most important things that everybody can control, right? It's irrelevant of what the uncertainty in the market and what the headline news are. How much cash you have in account? Portfolio allocation, I have 30% of my portfolio in cash on average. If the market is sells off, then my percentage of cash drops maybe to 20%, 15%. And if the market rallies, I raise cash and potentially go to 40-45% cash. So it's a living, breathing organism, cash, right? Kind of an analogy, and it fluctuates, right? So you've seen we only have 2 weeks left in October position. So since there's only 2 weeks left, not enough time, a lot of uncertainty in the new headline news, the COVID-19 president, stimulus package, elections, earnings season, a lot of uncertainty in the market for the next 2 weeks. If you have October position, that's becoming the flip of a coin, right? Market can rally and try to break 342, market can drop to 330, potentially 320 level. Since I don't have a control over that, then I would close the October position, and if I still want to be long the market, then I would roll down. And probably a long position would roll beyond the uncertainty level, which I think the uncertainty will stay here in October. It will stay here through the end of November. I think there will be a Christmas rally in December. I think we're going to have a strong market in December. Again, depending on the election results, but I think at least I'm positioning my portfolio that there will be a rally in December, first quarter of 2021. So that means, you either roll the position in December, January. That might not be enough time, then you roll them into March, right? You would roll quarterly and go long in the March position. By March, I think the market will reach all-time high, and I think that will give me more time to position properly. So portfolio allocation is important. Portfolio drawdown, this is something I can control. Portfolio drawdown I can control. Position size is extremely important, number of positions. Everybody says trade small, trade often. It's a great idea. What exactly does it mean? It means that your trade should be, from my perspective, your losses, your risk should be less than 2.5% of the portfolio, especially on a larger portfolio. If you have a small portfolio, $1,000, $2,000, I understand, especially if you're trading options, it's very hard to just risk 2.5%. So, you would have to risk more, but on average, the risk should be less than 2.5%. And that's how you determine what the trade size should be. If it's an option position, if you invest an option and you invest $1, I put a stop loss 50%, that means 50 cents. And then I looked how many, what the size of my portfolio and make sure that that 50-cent loss multiplied by number of contracts is less than 2.5% of my portfolio. If you're new to trading, if you're new to Tradespoon, I encourage you to only have 4 to 5 positions. This way you know that what you can control is that your maximum portfolio drawdown at any point is 10 to 15%. Why is this important? Because trading is, you have an opinion on the market and you invest based on your opinion. You will never be 100% correct, right? We can only speculate that the support will be at 330 and 342, but if the health of president is going to get worse, then the market will break 330. And if he recovers quickly, and if the bill, the stimulus bill gets passed over the weekend, magically, we can break 342. So at any given point, it's an experiment, right? Just like you're back in high school, in your physics lab or your chemistry lab, and you create a hypothesis, you invest your time and energy, and experiment will yield positive or negative results, right? Trading is the same thing. It's an experiment. You invest a certain amount of money based on your opinion, and then you divide your experiments into small experiments, and trading should be a law of large numbers, right? You might have a bad streak, not bad, but you might be on the wrong side of the trade, right? Some people, I think, right now are more bearish, some people are more bullish. Half of the people are going to make money, half of the people are going to lose money. But over a long period of time, if you zoom out and you look over a long period of time, as long as you're trading based on probability of success and return on capital, then your portfolio will grow, right? So you look at the probability of success. At Tradespoon, we offer 3 models: active trader, monthly trader, weekly trader. Since 2016, I've been using it for longer in my personal account. It gives you average of 75% accuracy. So 75% accuracy, return on capital. If I'm using short-term model, if I hold the position less than a day, I look for less than 1% gain. If I hold a position less than a week, I look anywhere from 1 to 2% gain. If I hold a position for a couple months, I look for anywhere from 2.5 to 5% gain. In Robo Investor, if I hold position for a quarter, then it's anywhere from 10 to 50% gain. So the longer you hold the position, the larger the gains you're looking for. In the same period of time, if you're looking for higher return on capital, your probability of success will be smaller. And then finally, not the most important, but the other thing that you can control, right? You can control what signals you're taking. You can control the timing, duration of your position, and then you can control manage position entry and exit. A Tradespoon 75% accuracy, so that doesn't mean your portfolio will grow. So you have to know what your target gain is, what your stop losses are, and make sure that the one losing trade, 3 out of 4 trades will be successful over a long period of time. No, not will, has been. I'm using so that 3 out of 4 trades has been successful in the past. So that means that the one losing trade has to be less than the 3 winning trades. Because no matter what system you're using, you can use a system that's 90% accurate, right? We're using earnings strategy. We're selling premium during the earnings, before the earnings announcements, and they're 90% accurate. But that doesn't mean that your portfolio will grow, right? Because if one losing trade is greater than the 9 winning trades, then your portfolio will continue to drop in value. So this is an important concept that you should keep in mind as you're trading. All right, so any questions so far? Alex, thank you. Twilia had many upgrades, target up over. All right, so today, here's the list of stocks so far. Mixed bag. We have all of them down. Utilities outperforming, I think, and Twilia. Twilia got multiple upgrades, continues to go higher. Peloton, last time I checked, continues to go higher. So this is not a materials are up 0.5%. This is not a this is not a panic or market sell-off, at least not yet. So there's positive news in the market. Last time I checked, actually FedEx was positive. So transportation sector is positive. FedEx is trying to break all-time high. So that's all positive news. And we'll see where the market is going to close. Right? I think market close will be important. I think if we stay above 330, this will be a huge win for the bulls. If we drop below 330, then bears are going to be controlled and they're going to retest the lows pretty hard. So, okay. So how do you trade in current market conditions? At Tradespoon, we offer again 3 models that I discussed. A lot of people are asking to have access to my portfolio real time. So we have, I would say, 3 main portfolios and choices based on your risk tolerance level, your how often you trade, how long you hold the position. All of these questions vary on the spectrum. I ask this question very often. Are you a day trader? Are you a long-term trader, swing trader, momentum trader, a long-term investor? So we have subscribers all over the spectrum of these answers. So something always to keep in mind. Some people, when they start opening Tradespoon subscription, they're under the impression that you have to trade every single portfolio or tools that we have. That's not the intention. The intention is to build different services for different subscribers. Since we don't know your background, we don't know your we don't manage your money. We're giving you technology and we're showing you what I do. You have to figure out who you are as a trader and what is your trading profile. In the journey of the, so going back to Yellow Tunnel, encourage you to open up account at Yellow Tunnel. There's a lot of concepts. Journey. I know I have so many journeys, I have to delete them. Start with the journey. But trading is a journey, right? So depending on where you are in your journey, your perspective on trading will change, right? As you get older, you might be more conservative, you might be managing larger portfolios. As you're younger, you might be more aggressive, you're managing smaller portfolio. So your risk tolerance and perception of risk will change, and that's something that you have to keep in mind. So that means you will need different tools and different models. So if you're an aggressive trader and you trade often, then we have Elite Trading Circle. Elite Trading Circle gives you access to the entire platform at Tradespoon. You have morning bell, closing bell, so you can see how I and Scott and I are trading every single day, morning bell and closing bell. You also have a trader log that every day you can actually see all of the trades that I do. You know, today I closed the earnings strategy, Pepsi, and you know, I sold Netflix put spread. You know, I bought back Netflix put spread. So, and Netflix was one of the active trader, right? You can see that in a live trading room environment, I trade the active trader signals, right? So it gives you provided signals, and this is where I would enter those positions. So Elite Circle gives you real-time access. You can either be present live on in the broadcast and watch kind of over our shoulders what we do with our commentary, or if you don't have time, you have access to trader log and you can see all of my trades. And if you want to know, you know, what position I have in Apple, let's say, you know, you can go in and say, you know, what were my trades in Apple, right, last 7 days. So this is the trader log and then SMS alerts. So you always can opt in to receive real-time alerts. So I encourage you to try this subscription. It's 30-day risk-free. We will refund your money if this is not something you're looking for. But this gives you access to everything, right? And you just need to decide whether you want short-term trade signals, long-term trade signals, and how many positions do you want to have. If you're not trading on daily basis, we also have 2 portfolios, Robo Investor and Premium Portfolio. So we have Premium membership, we have Robo Investor portfolio. Robo Investor portfolio, a lot of our new subscribers basically said we're not comfortable trading options. We're a long-term investor. We're managing our 401k, like 401k. We want to rebalance our portfolio. So we have a Robo Investor subscription. You get 4 trade ideas a month. So both Premium service and Robo Investor gives you 4 trade ideas a month. Usually I have anywhere from 20 to 25 positions in this portfolio. Average hold time is probably 90 to 120 days. Sometimes I hold a position for a month, sometimes I hold it for a year. I would say average is 90 to 120 days. Target gain 10%, stop loss 10%. During market sell-off, sometimes that range will widen. But I have stops. I have 80% success rate, so I don't mind holding stocks like JP Morgan or Chevron that, you know, energy and financial sector, you know, has been lagging, to say the least. But long term, I think, you know, they're not going anywhere, and, you know, then I would widen my range, right? So consider that. Maybe use dollar cost average, you know, maybe do half a position at a time. But this is something to keep in mind on the Robo Investor portfolio. And same thing, you get access to portfolio orders, you get SMS alert every time I enter or exit the position or adjust the position. So that's the Robo Investor portfolio geared for someone who doesn't trade on every day, who maybe trades 4-8 times a month, right? Probably average portfolio in the United States trades about 8 to 10 times a month. And then if you're more comfortable trading options, we do have Premium portfolio, same thing. It's 4 trade ideas a month, 1 idea a week. And you have, just like Robo Investor, it's geared toward option traders, not geared, but I trade using option spreads. You can also trade using stocks, right? So we give you a choice. Signal gets published on September 28th. You have a choice, either buy Nike at 124.23, or you buy a spread with break-even point of 110 plus 340, so 114.40. So you can see when using option spreads, then your break-even point is a lot, could be significantly less. So I'm reducing my break-even point. And you get an instructional video, and the same thing, you get access to all open positions, all open working orders, and SMS alerts. So these are live portfolios that you can have access to. If you want just Robo, we have membership just for Robo Investor. We have membership just for Premium Portfolio. And then if you want everything, then you have access to Elite Trading Circle. Let me know if you guys have any questions. Twilio is up. Alex, thank you for your question, for your comment. Thank you. All right, any questions? Okay, great. Then if you don't need to have access to live trading room portfolio, how many of you are actually trading on your own and just looking for the models? And how many of you, so just say, all I need is signals. I don't know how to manage them. And then how many of you are actually looking for access to live portfolio that somebody, that I manage? And then, I guess the other answer is to both. So maybe just tell me if, I'm looking for both, or just models, just type in models, both, or portfolio. All right, so both, models, trader, all right, perfect. Rebecca, Ray. Okay, thank you guys. Okay, so perfect. So some people need access to portfolio, some people are looking for access to the models. In terms of models, again, we have active trader, weekly trader, and monthly trader. The reason I like all these models, because models gives you a lot of signals. And our team, Scott and I, we review these signals and try to make sure they're diversified, and try to make sure that macro and microeconomic conditions also support. So today, active trader is geared toward 1 or 2 day holding time. So the model makes a prediction for the next 10 days, and it says that stock like Whirlpool or Netflix, they're in a strong uptrend, right? But the model makes prediction for 1 or 2 days. Sometimes people will hold this position for 10 days or 30 days. That, you can hold the position beyond 2 days, but you're doing this on your own, right? Because initially you see momentum behind Netflix, but the model did not make that, we're not trying to make these predictions beyond 2 days. And our strategy is either to day trade this position or hold it for 1 or 2 days. So that's how we trade Netflix, these positions. So Netflix actually traded today, as you notice. So you can always go into trader's log. Type in Netflix. All right, so you can see I sold the Netflix for 58 cents. I bought it back for 25 cents. Right, market is volatile. I did it in the morning, and then I decided to close it right away. But I was able to capture 33 cents. Probably can repeat this trade again. Where's Netflix? Right, so it sold off. I sold out of the money puts. It rarely closed it, and probably can retest, retrade again, taking advantage of the volatility and trading from months options. So this is how the active trader is designed. You enter the trade. You have 2 strategies: strategy B and strategy A. The news about and it's driven by futures data. So if the idea is to look at the futures data. You go in the morning, you look at the futures data, and the market is down more than 0.5%. So if you see that the market is down more than 0.5%, then you have a choice between strategy A or strategy B. So I chose strategy A, and it's actually was already down because the market is down. If the market is not down more than 0.5%, then more often than not, predicted low will not be reached. How did we find this 498? This is based on the model. So if you type in, this is a common question, where do you get these support levels? they're driven by the model. So model sees that support for Netflix is 498, overhead resistance is 532. Actually, the low today was 515. So it hasn't reached the low. So that's why I sold out of the money option, 505 put to get close to the predicted low in case, the sell-off would accelerate. So and you see a significant premium in these out of the money options. So that's how you would trade the active trader signal. If you don't see market selling off, then potentially yesterday's close, right? This is based on the previous day's close. Otherwise, you wait for predicted low or yesterday's low. Those are the trigger points to enter into these positions. If you want to leverage your portfolio, again, you can trade stock or you can trade option. I did the spread because I wanted to take advantage of the volatility during the sell-off. If you're not comfortable selling put spreads, obviously you can buy a call, right? So I'm using deep in the money call, 172.5 call for $8.25, or $10.70 if you want to do it based on the previous close. So that's the strategy of active trader. Let me know if you guys have any questions. Stock forecast, hourly stock forecast toolbox should be based on your time zone. Question was stock forecast toolbox, the 1 hour prediction, what time zone does it show? So for me, it shows 10:10, so that's central. If you're in Eastern, it should show 11:10. Ricardo, if you're using the model and you want, live trading, and you want to be participating in live trading rooms, then Elite Circle. Premium will give you access to the morning bell. Elite will give you access to closing bell, and Elite will give you access to the trader log and SMS messages. Caterpillar and XBI. So in general, I'm bullish on industrials. I think industrials will outperform the market. It's testing 50-day moving average. It's trading above 50-day moving average. It's trading above the breakout in June low, outperforming the value stocks. I think industrials will retest 52-week high by the end of the year. Right, depending on uncertainty in the market, but I'm trading as if industrials will outperform. Caterpillar, Deere, trading in this channel. I mean, short term it broke through the channel. It's staying above 50-day moving average. Pulled back through this breakout. I think Caterpillar, Deere will continue to outperform. These are one of the strongest stocks, and this pattern will continue, especially with all the manufacturing numbers that we have seen and industrial output. I think that pattern will continue. Biotech, same thing. We retested 200-day moving average, right? So it's a pretty volatile sector. Can we retest this again? Yes. But will we break through 120? Yes. So short term, obviously there is a lot of uncertainty. We talked about trading in a range based on the headline news. If you're thinking about end of the year, if you're thinking about Q1 of next year, I'm trading as biotech will break through this overhead resistance. You've seen me trading synthetic stock. At this point, I closed call, closed position. At some point, I will re-enter the synthetic stock again. So short term, there could be more downward momentum in the next 2 weeks. I think next 2 weeks are very important. Some of the uncertainties I think will get resolved. The health of president, potentially the status of the stimulus package, and visibility into the earnings. Right, earnings will start in the next 2 weeks. right? So always ask yourself, you know, are you a short-term trader and long-term trader, right? Because if you're a short-term trader and your vision is next 2 weeks, expect more downward pressure, right? Based on the headline news. So there is a lot of uncertainty. But if your vision is end of the year, you know, December, you should now think about your long-term position as, you know, going into January and March, right? Because there will be volatility in December, there will be volatility in November, right? That you cannot avoid. So that means the most appropriate strategies, we talked about laddering or dollar cost averaging, right? So use dollar cost averaging. If you want to buy biotech at 111, you have to be able to buy biotech at 100, right? You don't want to panic at 100, and it's, you know, 10-15% moves in underlying stock. You know, if it breaks through the support 200-day moving average, and, you know, spiders, that means spiders will probably break through the 318 level and retest 200-day moving average, then you would have to rebalance for your portfolio, and that would become more market neutral. But as of right now, I'm more bullish on the market. You know, my portfolio delta is positive. You know, if market breaks through 200-day moving average, then my portfolio will become neutral, and I would rebalance it. All right. Let's see. So we're talking about active trader, weekly trader, same thing. You can have subscription to a weekly trader. You can have subscription to elite service. Weekly trader, this is where I got, wasn't FDX. But weekly trader, we have Home Depot. I'm actually long Home Depot. So you can see, and technology sector, you know, retail sector, consumer discretionary, and industrial. So try to give a mixture of all three different sectors. Same thing. The only difference, very common question, Vlad, what's the difference between active trader and weekly trader? The intention is, again, it's a different time interval. That means your position size should be different, and that means that your return on capital should be different, right? So for active trader, I look for less than 1% gain. For weekly trader, I would look for less than 2% gain. And same idea, the signal gets published on September 28th. On September 28th, basically you go in and you would buy Home Depot, right? You would buy Home Depot, you could buy it at 263. If you waited for 263, it actually never happened because, you know, market was not down more than 5%, or you do based on open price or Friday's close price. So if you bought it at 268, right? Well, it gapped up, so maybe you wouldn't even get into it. But if you bought it at the open price, then as of right now, the stock is up 2.5–3%. And same idea, you can buy stock if you're more comfortable, you can buy option if you're more comfortable, right? That's majority of the people. You know, you need a different trading level, you need more experience. I personally trade option spreads, right? Because calls, I buy deep in the money call, but you know, the time decay is trading against you, right? Especially if you're trading out of the money options. So we suggest buying either deep in the money options or selling put spread, kind of like what I did with Netflix. So these are weekly trader. Again, different time interval. The difference is different model makes a decision, and the holding time is different. Active trader holding time 1 or 2 days makes prediction for the next 5 days. Weekly trader model optimized for make prediction 10 days. I usually hold position anywhere from 2 to 5 days. Like an example of FedEx that I traded this week. Right, so I sold the put spread on FedEx, closed it, you know, roll it again to the next week, sell it, you know, trying to close and, you know, buy it back again. So that's an example of how you would use weekly trader here. You know, it was only 1 day holding time, 2 days holding. Weekly trader, and then finally monthly trader. Monthly trader, same thing. Signal published on September 28th. Difference is it's optimized for 1 to 2 months, and holding time is anywhere 5 to 20 days. And here the target gain is 2.5%. So Dollar General, the signal was published The signal was published on September 28th, and usually I trade option spreads, right? Or you can buy a stock. So if you buy Dollar General on September 28th, the stock is up 1%, it was up as much as 2% or 3%. So this is how you would trade these signals using active trader, monthly trader, and weekly trader. The good news, the reason I like these services, because again, it's based on the model, but the model gives you a lot of, not always, but gives you more than 3 choices. So I kind of find the best stocks in different sectors and try to be diversified across different sectors. Right here you have Dollar General, Colgate-Palmolive, consumer staples, defense, retail, and CRM, right? Salesforce. Salesforce made a nice move. All right, so that's how you would use this model. You have active trader, monthly trader, and weekly trader. And then if you have your own stock and your own signals, so you just want to have confirmation, we do have different tools. You've seen Stock Forecast Toolbox. I use it during live trading room. I think it's a great tool, not only because I developed it, but because I think it's very accurate in terms of finding support and resistance levels. And you can see, despite the, these black swan events like unemployment numbers or COVID-19, president getting COVID-19, you can see, was market below 330? Yes, but the model accurately actually identifies support and resistance. And once market breaks the support, now you will see the next overhead resistance for the market is at 335. So a lot of time people would ask, well, Vlad, model is completely wrong, or model cannot predict, situations like president getting COVID-19. That's true. But it's getting model grade A, it's 71% accurate. And on the day when it is not accurate, you can still use it right now to say, well, where the key over what used to be support is now overhead resistance. For the market to break through the next level, right? If you're a day trader or a short-term trader, bulls have to break through the 335 level. As long as the market below 335 level, bears are in control, right, for day trading. So I would short at 335. If you're a day trader, you're scalping, I would go long at 330, right? It's a 5-point move with the clearly defined stop losses, because this is kind of a line in the sand. If we close above 335, this will be the win for the bulls. If we close below 335, this will be the win for the bears, because as long as the market below 335, the market is susceptible for two retests of 330 level. And these are pretty wide range, right? It's 1.5% move in underlying, or 1.25 move in the underlying stock. So this is how the model is intended to be looked, but looking for the 10 days, at least going into this earnings announcement, unemployment number announcement, going into the situation with health of the president, the bulls were in control, and the model is positive. But now, since we dipped below the lows, then model will recalibrate itself on Monday, depending on the close of the day. It will either become, if the market closes above 335, then the bulls are still in control. If the market closes at 330, you will see that this vector will get significantly less. So that means momentum behind the bulls is deteriorating significantly. So that's how you would use Stock Forecast Toolbox. You can also do the same analysis for 1 hour or 6 months. Right? You can look at 6 months spiders and basically say, where does the model see support? Interestingly enough, the model runs first day of every month, right? So it just ran in October, and it sees support at 320, overhead resistance at 351. So it basically says that in the month of October, anticipate both extremes to be reached, retesting the lows and retesting the highs, right? And depending on where we are right now, one can say, well, we're 14 points away from the lows, and we are 25 points away from the high. And I think model is correct. It sees bullish momentum, actually long-term bullish momentum. This month, it actually sees negative, or on average negative momentum. But it does see, model does see going into March making new all-time high. So politics aside, black swan events aside, based on the momentum and historical data, the momentum is behind the bulls, and I would not be surprised seeing the market at 390 by March of 2021. So great tool. I really enjoy using it. I think it gives you critical support resistance levels and critical trend indicators. Granted, not all stocks are predicted equally well, something to keep in mind. If it's a biotech stock or if it's an IPO stock, there's not a lot of historical data, or it's a stock that's driven by the news, right? Twilio, right? Well, see, if there's multiple upgrades on Twilio, the market model predicted overhead resistance to be 256, but the market is at 288, right? So it moved 16%, right? These are outlier events. Model does not know about this, and that's, you know, when the model is, you know, would not be able to predict the, you know, despite the Twilio being actually the interesting part that if you look at the yellow tunnel, this is sister company of Tradespoon, again, concentrating in trading psychology, but also developing different models, right? We have more models. And for aggressive power trader, you get bigger list of symbols, right? We're not limiting to 3 symbols. This is meant for aggressive traders that want to make their own decision, which sectors they want to use. So you can see momentum in Netflix. So a lot of technology names like Twilio. So this was on our actually radar. But it, you know, it did move beyond the anticipated analysis. And again, this is kind of on earnings, on upgrades. You know, these are outlier events that model nobody can predict, right? Model can see it's an uptrend, but for today uptrend, but still not that magnitude of the move. So Ray, weekly trader and weekly power trader, there are different services. You have to pay for them separately. Again, it's geared toward different types of traders. The model, the way you trade it is identical, right? It's, you know, 1 or 2 weeks predictions, holding time anywhere from 2 to 5 days. The only difference, there are some people that want less choices, maybe because they're new to trading or they just want us to do extra careful analysis. So the aggressive power trader will give you up to 10 signals. Very rarely does the model give us more than 10 signals. They are handpicked, right? I do go through each of them, but you have to make a decision. The intention of aggressive power trader or aggressive power weekly trader, not to trade all the signals, right? This doesn't mean that the model runs on Sunday and then you go in and you invest all your money into these 10 names. That's not the intention of the model. We'll pick, you know, I always pick one stock like FedEx, but you know, some people might want to get more exposure to semiconductors or more exposure to FANG stocks or more exposure to, you know, retail or industrial names. So this is meant for aggressive traders that want to be selective and tactical about which sectors or which stocks they want to invest in. I always pick one. If you subscribe to the newsletter, you see that I say, well, I'm trading FedEx, but then somebody else can say, well, I want AMAT, you know, Applied Materials. Ray, thank you for your question. I don't want to get into politics, but you know, trading psychology is extremely important. The whole premise of Yellow Tunnel is to make sure that, you know, emotional intelligence, right? You know, I talk about emotional intelligence. I encourage you to invest into reading emotional intelligence books. Daniel Coleman, I think, is kind of one of the main, you know, I think it's probably what, 20, 25 years, the movement. But the idea is that I think some people think that, you know, your emotions and your cognitive decisions are completely separate, right? You can feel sad or happy, but that has no impact on your trading decisions. You know, the movement of the research about emotional intelligence, what research actually shows is that you cannot separate. I think more than 25 years ago, the idea that these systems, that your iambic part of the brain, right, is separate, right? Your fight or flight part of the brain is completely separate from your frontal cortex, and the those circuits are completely working independent. In the past 25 years, research shows that these net circuits are actually connected, right? Your iambic part of the brain and your cognitive part of the brain will impact each other. So emotional intelligence is the idea that you have to be what's the right way to say this? You have to be self-aware. Very important for trading and just in general to be self-aware. And we go through labeling exercises in the live trading room and find what is the main driver, what is the main emotion you're experiencing, and ask yourself before. I always write in the journal, why am I getting into a trade? And you realize that as uncertainty arises, we tend to make decisions based on our emotions, right? So the question was, will the market go higher because of the Trump, or will it go lower because Trump is sick? I think you have to understand that, again, half of the people will vote for Republicans, half of the people will vote against the Republicans, right? And the world of traders may be skewed, maybe Wall Street usually more Republicans for obvious reasons. I'm not going to get into it, but again, it's driven by our biases, right? If you're going to vote for Trump, you probably think that this is an opportunity, and market reached 330. I'm not going to get this opportunity again, right? And you buy, but you're not buying because you're doing a technical analysis. You're buying because you have certain biases, political biases. If you're voting against Trump, then the opposite is the case. You probably think that the world is coming to an end, and there's more uncertainty, and again, we will not know who's the president, beyond November. I'm just kidding. So my opinion, if you're thinking about how will conditions of Trump affect stock market, I think you make a decision based on your biases. I think the better approach is just to look at the support and resistance levels and see where money is floating, right? And I have my own biases, right? So everybody does, but it's very important to be self-aware and at least recognize that you have a bias and document it. And just maybe it's, again, trading is based on your opinion. They will be impacted by your emotional, your biases and emotional intelligence. Just be honest with yourself, document it in your trading journal. And if your main reason is because you have underlying, maybe even unconscious bias, at least try to be aware of it and document it, and maybe reduce your position size. But that's my opinion. If you're trying to make a decision based on politics as opposed to based on technical data. Biases aside, I would I know that if the market breaks through the 330, there will be hard retest of 330. If the market breaks through the 342, we will retest 360. That I do know, and that happens 75% of the time. You can have a false breakout, but if it's a confirmed breakout, then you will know how the Trump condition will affect the stock market. Until now, it's a headline news. If he feels better, I think the market will rally. If he feels worse, market will sell off. Nizar, why does energy is driven by dollar, right? Well, there's headline news, second wave of coronavirus, people flying less. I don't think this is any news. I think it's mainly driven by dollar. Dollar had a strong rally, right? Almost 5% from the lows. That impacts commodity prices. I think energy is oversold. Actually, I'm looking at XLE. It's back to the March level. Right, we're going, and actually did this, going back to 2008. We are actually lower than we were during 2008 crisis. I think, we're not in an energy independent world, and this is, if you're a long-term investor, I don't know if it's going to be back to 98 in a couple of years, but it will be back to 55, 75. So short-term, obviously, it's a downtrend. You need to wait till it's broken, but long term, I think it's an exaggerated move. And as soon as the dollar recovers, I think the market will rally. I think dollar will recover. I mean, I think dollar will continue to go lower. I think dollar will retest 88 shortly, and that's when energy will rally. But again, depending on the headline news, I would just watch the dollar. The currency market will dictate, it will influence commodities market, it will influence industrials, it will influence, financials. So, it's more of an opinion about dollar. So far, I think most analysts, including myself, believe the dollar is in downtrend and it will be continue weaker based on the deflationary market environment. I do not trade UVXY. I stay away from the triple leverage ETF. If I want to leverage my portfolio, I trade options. And I encourage you to do the same. I think it's very dangerous to trade triple ETF because the move to the upside and the move to the downside happens at different rate. All right, it's 10:31. You guys have been great. Always enjoy these broadcasts. I hope you guys, find this useful. Send me your feedback. But that's all I have for today. Enjoy your time and weekend with friends and family. Recharge. Again, emotional intelligence is important. If you're tired, if you don't get enough sleep, it will impact your trading decisions. So spending time with family, friends, reading a good book, walking outside, breathing exercises, all of that will improve your trading results. So spend the weekend wisely, invest into your health, and I will see you guys either at the closing bell or on Monday. Alex, Barbie, Claude, D, Daniel, David, Ed, Edwin, Eng, Alon, Faust, Gordon, Greg, Han, Jim, John, Kaushik, Kevin, Maria, Mike, Mireya, Nizara, Sama, Peter, Raul, Ray, Rebecca, Sean, Thomas, TJ, Don, Vitas, and everybody else. Thank you very much and have a great day.